Stocks open firm but stay ranged amid global uncertainties today. Telecom as well as Realty are the big gainers, even as energy and pharma drag and mid-caps outperform.
Brokerages upgrade their target prices for the Reliance stock after a strong all-round Q4 performance. Jio, oil and gas and retail business power up the EBITDA growth, even as the oil to chemicals remains resilient.
A 7-time subscription of the Vodafone Idea follow-on public offer lifts the expectations of a revival in its fortunes and of key creditors like Indus Towers. Analysts see a tariff hike benefiting all telcos around the bend.
And Hatson Agro jumps on a dip in milk prices. Tejas Networks climbs on posting heady sales growth, and Inox Wind gets a boost from a bonus issue plan. But M&M Financial slides after it detects a near 150 crore fraud at a branch.
And gold sees its biggest daily decline in 3 years, even as silver loses 5% overnight as investors take profits after the recent surge. Experts, however, see higher prices in the second half of this year. Hello and welcome. You've tuned into Business Lunch. I'm Nisha Podar. With me is Sonia Shenoy. So, Sonia, markets opened higher today. It had a little bit of choppiness, but still holding high. Let's take stock of the market at lunch. Our Nifty 50 with 63 points gain at the moment, 0.3% up in trade. And remember, it had opened above the 22,400 levels today, just about holding on to those round numbers. Sensex too gaining over 200 points at the moment. Bank Nifty is the one which is showing slight bit of underperformance to the key indices there, 0.2% up in trade. And the mid-cap universe, that has shown maximum buying gains as well as resilience, over 1% up on mid-caps, and that is also impacting the overall market strength with more advancing stocks compared to the declines. Just looking at some of the counters, which are the heavyweights and percentage gainers on my screen at the moment, big boys like Bharti Airtel, Grasim, they are clocking in over 3% gain at the moment, and Sun Pharma is one of the biggest draggers, close to 3% down. Sonia.
Okay, well, lots of big movers, right? So let's begin Business Lunch by focusing on big boy Reliance's quarterly numbers. Reliance Industries delivered a robust fourth quarter numbers. All business segments clocked in strong growth. The revenues climbed 11% and the EBITDA rose 14% year on year. But let's also take a look at what the brokerages have made of the earnings this time around. Across the board, actually, most brokerages have raised their target prices as well as their earnings estimates. Just looking at some of them, Jefferies has maintained a buy. Their target price has been raised to 3,380. Bernstein has an outperform call with a target of 3,160. Morgan Stanley has an overweight call with a target price of 3,046. While Elara has an accumulate, they have actually upgraded to an accumulate from a buy, and they have raised their target price to 3,479. Now, the reasons for the bullish views on top of mind is Jio, really. The Jio business has done very well. It's been ahead of what the street was estimating, higher average revenue per users due to improved subscriber mix. Apart from that, the oil to chemicals profitability has also improved considerably because of the robust refining business. The Jio net subscriber additions were robust at 10.9 million. And the focus is now on 5G monetization. The other big thing, a big positive for Reliance Industries, is the fall in their net debt. So the reported net debt has come in at $14 billion, which is a fall of 8% year on year. And now that the peak capex for the company is behind them, perhaps they could improve their balance sheet further. So a lot of brokerage positives coming in. But standard disclaimer, Reliance Industries is the owner of the channel that you're watching.
All right. Thank you so much, Sonia, for putting the spotlight on what the brokerages are saying and the key highlights of the numbers of big boy Reliance Industries. Let's now throw spotlight on some of the stocks that are buzzing in trade today on the back of their quarterly numbers. Remember, earnings season in full swing, and that's really impacting the market momentum. So shares of Tejas Network is surging in trade after the company, remember, reported a strong set of fourth quarter earnings. In fact, our colleague Reema Tendulkar is right here to give us the key highlights. Tell us, Reema.
Oh, absolutely. But before that, just a quick word on what Tejas Networks done. Now, this is a company which manufactures telecom equipment, both wireless and wireline, your switches, routers, etc. Now, the company has been benefiting from Make in India. They're participating in the PLI scheme. BSNL is planning to roll out their 5G, so there is a big order that they want from BSNL, the Bharat Net, even from Railways, the Kavach program. And the hope is that Tata Semiconductor foray could also give Tejas Networks an added boost in the future. Now coming to the Q4 numbers, very strong. Q4 is seasonally strong for Tejas Networks, but this time, even if you strip out the seasonality, the numbers are looking good. 137% up QOQ in terms of revenues, 340% up year on year. The company's reported profits after 5 consecutive quarters of losses. EBITDA 150 crore, bottom line, that's profit of 146 crore. The order book has been super strong for the last 3 quarters. This quarter, it's at about 8,200 crore rupees, but the last 3 quarters, you've seen the order book between 8 to 9,000 crore. The cash on the books is close to about 640 crore rupees. And I'm also going to leave you with the annual performance of Tejas Networks and how it compares with what they've done in the past. In FY23-24, we've seen the revenues of the company go up 168% to nearly 2,500 crore rupees, and this time turn in a profit of 63 crore after losses in the prior 2 years. Back to you.
Okay, well, Persistent Systems is also in focus on the back of their quarterly earnings. The company reported a good set of numbers. However, they have guided for flat margins going ahead, likely pushing back expectations of a 200 to 300 basis points expansion. Listen in to the CEO, Sandeep Kalra, as he explains the disappointing margin guidance.
The context of margins is in the context of a bigger picture. So if you look at the overall revenue growth that Persistent has had over the last 4 years, in the last 4 years, we have had a pretty good relative outperformance from a revenue perspective. If I was to give you statistics, the last 4 years, the industry has grown by 1.6%, 18.6%, 10%, and 2.7% year on year. Compared to that, Persistent has grown 12.9%, 35%, 35%, and 14.5% for the last 4 years. Now, if you look at the bigger picture macro, the macro continues to be tough. So all we are trying to say is we want to continue to be a relative outperformance company, keeping the margin at the same level or better. But if it is a question of growth versus margins, growth at the same margins is the priority. We need to invest in capabilities like generative AI, and we need to be ahead of the curve. That's what Persistent has always been known for, and that's what our endeavor is. We are not a price leader. We are a competitive leader with respect to capabilities and so on. So we are investing in the capabilities, not just to achieve our near-term goal of $2 billion in the next 3 years, but lay the foundation for a much bigger company to come based on the competitive differentiation on an ongoing basis. And as the market improves, this should definitely give us a much more leverage. And obviously, with that, the margins will definitely expand. So the goalpost remains the same. Next 3 years, aspiration of growth and margin expansion, both remain the same.
All right, that's the commentary coming in from Persistent Systems, and the stock is up 0.3% in trade. Now, moving on then, let's slip into a short breather on Business Lunch. But when we are back, we'll discuss India's food regulator will test all the samples of major spice mix brands in India. And this after Singapore and Hong Kong banned select products of popular brands on cancer concerns. More on that story after a very short break. Stay tuned.
Welcome back. You're watching Business Lunch on CNBC-TV18. Well, Baba Ramdev appeared before the Supreme Court once again in Patanjali's misleading advertisements case. He said that they have issued an apology in 67 newspapers. The Supreme Court questioned how prominent popular Indian brands MDH and Everest, their food authorities, allegedly detected the presence of pesticides above safe levels. Timsy is here with all the details. Timsy, over to you.
Well, yes, yesterday that's when we broke the story to you that FSSAI has now ordered inspection against all spice brands that are selling spices across the India, and not just MDH and Everest. And this is to check and assess whether the spices that are sold in the country are as per the FSSAI guidelines or not. To be specific, to check ethylene oxide is being used in these particular spices or not. When we speak of the inspection, The inspection will be carried out across the country with the help of state food regulators, where random sampling will be done. Samples will be picked up, they will be tested, and then only a formal decision as to what action needs to be taken, whether there needs to be taken or not. That is something that FSSAI will decide. So let's see what happens, because when it comes to the usage of ethylene oxide, that is banned in the country according to the FSSAI norms, and that is something where the government is now trying to be a little cautious.
All right, Timsi, thanks so much for getting us those details. It's a very, very important discussion and a matter of debate here, and the regulators are taking action. And the FSSAI has also initiated action against Nestle for high sugar content in its baby food brand Cerelac. Timsi, tell us more about that bit as well.
Well, yes, as you rightly said, the action also comes against Nestle. To be precise, not just Nestle, all baby food and formula milk manufacturers are under FSSAI scanner. Again here, testing has been ordered. Random sampling will be done across the states with the help of food regulators, state food regulators. And yes, with respect to Nestle per se specifically, a scientific committee has been set who is now testing the samples of Nestle's Cerelac to see the sugar content, whether they are as per the government guidelines or not. Here, let me remind you that the guidelines say that up to 20% can be the sugar content. And what Nestle India had to say to this, well, last week they issued a clarification where they said that they would like to assure that their infant Cerelac products are manufactured to ensure the appropriate delivery of nutritional requirements such as protein, carbohydrates, vitamins, minerals, iron, etc. for early childhood. Also, they said that over the past 5 years, they have reduced added sugars by up to 30%, depending on the variant. And they regularly review the portfolio and continue to innovate and reformulate the products to further reduce the level of added sugars without compromising on nutrition, quality, safety, and taste. So let's see, because this scientific committee, when it comes to specifically Nestle's Cerelac, will take a month's time to get back to FSSAI, and only then FSSAI will take a final call whether what action needs to be taken, whether an action needs to be taken or not. And yes, in the meantime, all the state food regulators will do random sampling, checking of baby food, baby formula milk by all the brands to see whether they are in compliance with the norms or not. Back to you.
All right, Timsi, thanks a lot for that. Let's slip into a quick break on that note. But on the other side, gold has seen its biggest daily decline in 3 years, while silver loses 5% overnight. More on those moves in the precious metal space on the other side. Stay tuned.
Welcome to the CNBC-TV18 special. I'm Shireen Bhan. Well, AI is the buzzword, and joining the AI party is Interglobe's Rahul Bhatia. He is an unusual co-pilot on board in CP Gurnani, veteran IT sector specialist who was with Tech Mahindra for almost 20 years, and the two of them have joined hands now to get into transforming the world of technology through the lens of AI. Mr. Bhatia and Mr. Gurnani, many thanks for joining us here on CNBC TV18. Appreciate your time. The press release talks about redefining industry standards, using AI, transformation, and so on and so forth. But let's get to the very basics. How did this partnership come about? I'm going to start with you.
Well, I've known CP for a very long time, and I knew that he was coming off his obligations at Tech Mahindra about a year before he did. And we were just having this conversation about trying to team up together. We used to have a technology business at some point in time, which we had sold in 2018. And it was just one of those things, after having sold it, we wanted to go back into the space. But obviously we were looking for the right sort of partnership, and CP and I talked for most of last year and came to the conclusion this is something we'd like to do together. and here we are.
So it's been a year in the making, Mr. Gurnani. I remember when we spoke about what you would do post-Tech Mahindra, I was very clear you were not going to walk away into the sunset. And here you are, starting afresh. How do you differentiate this venture from what you know and what is around us at this point in time in the IT sector?
So let's first address the drivers from my perspective. Drivers from my perspective was that every second guy I knew started asking me a question after your interview, that what's my bucket list? Because that's how you started that interview. And I looked at, various things. I'm not saying that there was zero bucket list, but there were two definitely which came up repeatedly. Number one was that I was always a corporate entrepreneur. I did create ventures. I did scale up ventures. But it was never where I was responsible for contributing right from the day zero. So I said, no, I now need to become an entrepreneur myself. So that was my first driver. The second driver was that industry, we built a great industry. And I still believe that, in terms of IT services, there is no other country, there are no other, we now deliver global scale product and we do global scale, customer work. So I said, but more often than not, we are dependent on product and platforms which have not been made in India. Why is it that we cannot create a SaaS venture which addresses the global market? I'm not saying it has never been done, but it's more that when I started researching the subject, and thanks to my, knowing Rahul Bhatia, it was very clear that TTLH is a market which probably can benefit from new intervention.
Well, for the benefit of our viewers, I'm just decoding that abbreviation. Essentially, the focus is going to be on travel, transportation, logistics, and hospitality, spaces that Interglobe is already in a leadership position in. So that's the starting point as far as this particular venture is concerned. Do you already have clients on board?
A few clients with whom we are doing proofs of concept. The reason is that product takes a little longer to evolve and build. But when you're trying to integrate products and improving a particular process thanks to AI, I think it is easier to do proofs of concept. So our current boardroom conversations are A, sharing the vision of the products, and number two is what and how soon can we show you what AI will be able to do for your businesses.
So how soon can we expect this to take off, pun intended?
The takeoff has happened today.
The takeoff has happened today, in your words, a proof of concept. How long will it take for you to actually be able to deliver on the promise that you're holding out?
I think, I left Tech Mahindra on 19th of December, and since then, most of the days, we have been working together, listening to the customers, talking to the prospects, building teams. So I think over the next 1 year, you will see a lot of good announcements. This is just the beginning.
This is just the beginning. But let's address the beginning, Mr. Bhatia. You are, of course, going to be the majority shareholder in this venture. Can you break that up for us? What is the exact shareholding going to be?
We prefer not to talk about it. It's not relevant.
Okay.
I think that what is important is the journey and what we intend to build together. Over time, of course, I would expect that as leadership comes into the company, there would be a mechanism to reward them for their efforts. So it'll be an ever-changing thing. Like I said, it's not relevant.
So you are looking at bringing other partners on board?
We were talking about, I was referring to
ESOPs.
people who will come on board in the company, and they'll obviously, as the company sort of starts to fire on all four engines, that we get an incredible piece of action.
But how is this going to work in terms of being able to service everything else that's under the Interglobe umbrella from Indigo Airlines downwards? What is the arrangement going to be for this particular joint venture servicing some of the other brands under the Interglobe umbrella?
So, Shireen, the joint venture with CP is not predicated on the businesses we have in terms of becoming a service provider to these businesses. If that happens, it's just something that will happen. But I think what we bring to the table to the joint venture is the fact that we are in these 4 distinct industries, the fact that we have a lot of domain knowledge in each of these industries, the fact that we understand where these industries are not able to talk to each other, and we feel that just because of the institutional knowledge, what we bring to the table is this common thread of where the opportunities may lie. And once we're able to identify them, and off that sometimes co-create products and services that will have applicability on a global level. And if in that applicability, companies that we are engaged with find the proposition appealing, then of course they will work with that. So as you know, whether it's the airline, we are heavily invested in travel commerce, we are invested in our relationship with Accor. We are invested with UPS, and we just think there's a thread to be woven between these businesses to come up with some unique propositions.
I'll get to the thread in your words that you hope to be able to weave together and get each of these businesses to speak with less friction to each other. But just in terms of capital, what's the kind of capital that you're putting into this business as it gets started?
Without going into numbers, we are well funded, and we're well funded for several years to come. And we'll see how things go.
So what are the pain points that you hope to address? Because you said that you bring to the table the experience that you've had across these sectors with the hope of being able to optimize on some of the problems that currently exist. What are the big challenges that you face within each of these industries that you hope to solve for?
I'll allow CP to respond.
Okay. What are the problems that you hope to solve for?
Shireen, the best part of these few months is listening to the customers, listening to some of the young startups, and also talking to some of the large hyperscalers. Because all of us are trying to solve some of the challenges. So let's take this example. You go to the airport, I go to the airport, we use DigiYatra, but it does not connect to the last gate. Somewhere there is an integration challenge. Somewhere there is a data sharing challenge. Somewhere there is a work to be done between 3 or 4 different applications that the airline or the aircraft is using. It's a beautiful product. It's just that it requires a little more interfaces and products.
All right. Well, more on that later. Very special interview there. But with that, it's curtains down on this edition of Business Lunch. Thanks a lot for watching. Keep it with CNBC-TV18 for more news and action.